So the Office for National Statistics has just dropped its 2025 inflation data. And the good news is that inflation has fallen again. But interestingly, the housing data inside the ONS figures is quietly one of the most interesting signals we've seen all year. So what does it really mean for both mortgage rates and house prices, and will we finally get to see that base rate cut tomorrow? So according to the ONS's November inflation data release, the Consumer Price Index, or CPI inflation, fell to 3.2%. That's down from 3.6% the month before. And CPIH, which includes housing data, also continued to slow. But crucially, housing-related inflationary pressures are starting to ease. This isn't inflation gone. Obviously, prices are still rising, but they're rising more slowly. And this is exactly what the Bank of England wants to see. And the housing data is where things get really interesting. The ONS data shows that owner-occupier housing-related costs, so things like mortgage interest and general housing services, are now making their smallest contribution to inflation since July 2023. And that contribution's been falling for the last 10 months. Rents are still rising, but even rent inflation's starting to slow. And housing is no longer the inflationary problem it was last year. And for the Bank of England, this really matters because housing is one of the stickiest parts of inflation. And once that starts to turn, then policy pressure can start to ease. And this is why we're already seeing lenders cutting rates ahead of any base rate decision. Lenders don't price fixed rate mortgages on where the base rate is. They price them based on where they think the base rate is going to go next. So we've got a falling CPI, slowing house inflation, and wage growth cooling. We've already talked about swap rates easing, and that's feeding through to cheaper fixed rates, better remortgage options, and more lender competition. And we're already seeing this across a lot of the high street lenders and some of the building societies. So the big question is, will we get that base rate cut tomorrow? Nothing's ever guaranteed. The Bank of England will never comment in advance. But the data all kind of lines up. Inflation's still above target. It's clear it's moving in the right direction. Housing pressures are easing, and financial conditions have already tightened enough. It makes a 0.25% cut a very real possibility tomorrow. Or at the very least, it's a strong signal that we should see a cut early in 2026, if the trend continues. And remember, even if we don't get a base rate cut tomorrow, mortgage rates can still move independently, and often do move ahead of it. So if you're coming to the end of a fixed rate mortgage, sitting on a tracker, or thinking of moving in the next 3 to 9 months, it's time to review your options. You don't need to wait for the headlines. There's plenty of deals out there, and remember, with most lenders, we can always reprice the deal later. So obviously I'm going to be sat glued to the Monetary Policy Committee decision tomorrow, and I'll drop a video as soon as it lands. And if you want some personalised advice, then my links are in the bio. I'm Patrick Weightman, your local East Midlands mortgage and protection advisor, serving clients up and down the UK. Speak to you soon. Bye-bye.